Hey everyone, welcome back. We've got huge Polestar news. Polestar reports revenue of 1 billion US dollars. Polestar revenues has almost doubled in a 1-year period. Now, Polestar revenue of 1 billion is only in the first half of 2022. It's truly extraordinary because this is a 95% year-over-year increase. Polestar only made half this amount last year, the same period. Now, in doing so, Polestar has delivered 21,185 cars. That is all delivered in the first 6 months of 2022. This is compared to only delivering 9,510 vehicles for the same period in 2021. Now, cash and cash equivalents of the US dollar, 1.38 billion. Now, Polestar is still on track to deliver 50,000 vehicles by the end of this year. Now, in all of this, the CEO of Polestar, Thomas Ingersoll, has made a comment, and I quote, "We made important progress in the first half of 2022 as we double revenue and volumes, and successfully listed on the Nasdaq stock exchange in New York. In addition, we maintain strong momentum in our global overtake and expect to deliver 50,000 cars to our customers this year, meeting our 2022 sales guidance. With several groundbreaking cars to come, Polestar is poised for a period of rapid growth." Now, this is truly extraordinary. In cash and cash equivalents of US dollar, that is $1.38 billion as of June 30th of 2022. That is up more than 80% since the end of 2021. That's following successful listing on the Nasdaq stock exchange in New York City. Now, in previous years, such as 2021, in case of revenue, Polestar had $534 million in revenue in the first half of 2021. And as you can see, that's almost doubled for the same period in this year. Now, what's interesting is that this also follows over in terms of cost of sales. For 2021, first half of 2021, the cost of sales were $499 million. However, in the first half of 2022, cost of sales were $987 million. Now, gross profits for the first half of 2021 were $35.8 million. This is an increase this year, of course, with $53.4 million in the first half of 2022. So, as you can see, profits are extremely low still for these companies. The cost of operation is still widely expensive, as you can see. Now, there's other things such as selling, general, and administrative expenses. Now, in this changes, it's a 60% change from the first half of 2021, which was $278 million, to $446 million in the first half of 2022. We can follow this up with research and development expenses. There's actually a drop-off. In the first half of 2021, it was $106 million. In the first half of 2022, it's $98.8 million. Now, other operating expenses and income, $14.8 million in 2021 first half, while this year first half is $20.7 million. Now, listing expenses is $372.3 million, and that's for the first half of 2022. And this was not included in last year. And I think when it says listing, it could be in reflection to the public listing. Now, operation loss is quite interesting. The first half of last year was $264 million, while this year operating loss is $885 million. That's absolutely extraordinary. So while revenues are doubling, you can obviously see that the cost of running these companies, they're not really getting cheaper. It is still widely expensive. That's why these companies are investing in themselves for the long term. It's not a get-rich-quick company. EV companies do not work that way. The cost of operation, the operating loss, those are all out of hands, as you can see. Basically, the company isn't making much money right now, and it's not going to make money for a really long time. And that's just EV companies in general. Ideally, they need to bring down the cost for batteries, lithium, cobalt, these materials that cost so much to make electric cars. If you can bring that down, you can drastically increase the overall profit on each vehicle that is sold. The only other way that you can do this is simply raising the price of given vehicles. But that's not always a great solution because customers usually want something good for their money. They usually want something that is fair trade. Now, gross profits increased by 17.6 million. That's a 49% as if the results of higher sales of the Polestar 2, particularly offset by products and market mix. However, keep in mind, this is only selling the Polestar 2. Next year, Polestar will begin selling the Polestar 3, an SUV. This vehicle will help drive a lot of sales for Polestar. It's a more expensive vehicle, so it's not going to sell more than the Polestar 2. The Polestar 2 is Polestar's main vehicle. That's going to be their most popular vehicle for a very long time, possibly until the Polestar 4 is released. That's a more affordable SUV, and it's a little bit smaller than the Polestar 3. Now, interestingly, I'll list some of the markets that Polestar has added since the start of 2022, and these are great, including the United Arab Emirates, Kuwait, Hong Kong, Ireland, Spain, and Portugal. Really great stuff. Those are 6 markets, 6 new markets that have all been added to the Polestar family as of the first half of 2022. Next up, as we know, Polestar has already begun hiring in Italy because Polestar will be establishing a Polestar space in Italy quite soon, and I believe they will start in Milan. I made a video on this subject, so you can go check it out if you're curious. Now, in terms of recent developments and upcoming events, Polestar 3 electric performance SUV is still on schedule for its world premiere in October 2022. Now, in August 2022, Polestar confirms plans to put the electric roadster concept into production as the Polestar 6. This vehicle is expected to launch in 2026. Now, all 500 built slots of the Polestar 6 LA Concept Edition were reserved online within 1 week for production announcement. Essentially, Polestar sold out completely of all 500 unique models. Now, other interesting development is that Polestar began delivering of the Polestar 2 electric car to Hertz in June 2022. This is part of the purchase agreement for 65,000 vehicles from Polestar, and Hertz subsequently adds the Polestar 1 electric performance hybrid to its dream fleet as well. Now, in support of Polestar working capital needs, over the last 3 months, Polestar repaid 2 existing and entered into 2 new 12 unsecured working capital loan agreements with 2 banks in China, totaling approximately $200 million. Furthermore, in late August 2022, Polestar entered into an additional credit facility with one of those banks for approximately $145 million. Now, in other further news, Polestar expects to publish its Q3 2022 financial results on November the 11th of this year. So it's going to be a while before we get that update. Obviously, we got to wait until November. A couple of months. It's no rush. Now, just like I outlined previously, Polestar still expects to deliver its full year target of 50,000 vehicles this year. And Polestar deliveries will weigh towards the further capital following disruption from obviously the pandemic in China and Shanghai, the shutdowns, delivery constraints, and obviously shortages on parts, on material. Now, naturally, this is remarkable stuff from Polestar. It's good to see that they're doubling their revenue. However, as you can see, profits are still low, and we have to remain honest with each other. We've got to keep a clear objective. I love Polestar, but I must keep a clear objective. I shouldn't be biased, neither should you. Obviously, this is not financial advice, but no matter how much you love a company, you should never be biased. Long term, Polestar, along with literally every other electric manufacturer, they need to find a way to lower the cost of material, including chips, graphics card, not to mention the batteries. The supply chain issues, the expenses, manufacturers need to find a solution to this, or else they will be dealing with high capital loss, high operating loss for decades to come. For a long time, decades in the future, we could still be dealing with these issues if we don't resolve them early. A lot of countries seems to be switching to this idea that they should become fully electric by 2030 or 2035. But my criticism is that these countries are not setting up infrastructure. They're not setting up the proper infrastructure and incentives for people to produce more material that we need, such as lithium, such as cobalt, and to produce these products ethically, not unethically, by using child slavery in places such as Congo. That is completely messed up and shouldn't happen at all. They have to find better solutions for these problems, or else they will continue to get worse as time goes on. These governments, these countries, they're not putting enough incentives in place to get companies to invest in these future technologies, into more graphics card, into more chips, into more lithium battery mining, into cobalt mining, doing it properly, sourcing these material properly. Not enough is being done. Not enough infrastructure is being built. So while these countries all want to switch to renewable vehicles to better the environment, at the same time, they're not doing enough. All I hear is words, promises. I'm not seeing real action. That's what's missing. A lot of these countries, they simply have a lot to say and very few to do. And it's time we hold them accountable. So that's it for this video. Thank you for watching. Subscribe to see more. And of course, I'll see you in our next video.